class. Welcome to this beautiful session of ours again, a continuation of what we were doing earlier on. Recall in our last class we had looked at the format of our presentation when it comes to the two accounts, that is the current account as well as the capital account. Our session today, our focus mainly will be on the format of statement of financial position. As we know, we had looked at sole proprietorship format, which in that case you'll find that the same approach you're going to use in partnership. So in partnership under equity, things will be kind of very different compared to the other form of businesses. Because at this point, I'll be taking into consideration our two accounts, that is the current account and the capital account. So you realize that these balances, the balances in our current accounts and capital in the current accounts, these are the balances that we'll be considering now in our statement of financial position. So to do that, let's jump straight and look at the format of our statement of financial position when it comes to our details here. So allow me to erase these points so that we should look at a statement of financial position very well. You'll find that once you're able to understand these simple steps, working out questions for partnership, it will be very, very easy for our side, and that will make our work very, very easy and understandable. So take a seat, relax, concentrate, and understand the concept. So this case, we should be looking at a format. So I'm talking of JKI Enterprise, that is partnership business, a statement of financial position, a statement of financial position, statement of financial position as at 31st December 2021. Excuse. So that is our statement and title. Recall, title is always very key and very important. You must not ever miss a title. So mentioning that, talk about our non-current assets here. Non-current assets. Non-current assets. That should give us our cost, accumulated depreciation, and accumulated depreciation, and net book value. So doing that, we start with our, say, like land, if at all we had any. Buildings, for example. Depreciation, accumulated, net book value. Talk about motor vehicles. Furnitures. And any other non-current asset that you could be having. So you see that this one you are going to close, because in that case we are closing this, and that's why you're having a double line. Then talk of our current assets. Talk of our current assets. Our current assets, of course, will include in order of, we're going to look at it in order of liquidity. We are going to look at it in order of liquidity, and therefore our current assets, this is what we should be having, of course, after having our total there. Current assets, we start with inventories, trade payables, less any provision for doubtful debts, provision for doubtful debts, prepayments, cash and cash equivalents, total non-current assets. This should give us total assets. This is receivables. Sorry, this is not payables. This is receivables. Oh my God, what have I? That is receivables, trade receivables, right? So I know you're also wondering, Mwalimu, what is happening, right? So talk of equity and liabilities. Talk of equity and liabilities. So you'll find that this is one area where things will change. Like in this case, we are going to consider our capital in terms of current and capital account. So I'm going to start with a capital account for John and Kiarie. Continuation of that, we're going to have our current account here. Current account. Again for John and Kiarie. We'll be having it at that point. So that should give us our total equity. Total equity. I'll be having our total equity at that point. Consider long-term liabilities. Long-term liabilities. Such as long-term loans. Long-term loans. Current liabilities. Current liabilities. We'll be having maybe trade payables. Consider any accruals, if at all you're having any bank overdraft. All these items we'll be considering them here. So that as at the end of the day, we should be having our figure there. As at the end of the day, we should be having our figures at that point. So therefore, to give us our total equity and liabilities, give us our total equity and liabilities, and that is what we should be having. So clearly this should give us a statement of financial position, and basically this is what we'll be required to have when it comes to preparing our statement of financial position, whereby you'll note that under equity things are kind of different, because we are looking at our capital account and we are looking at our current account differently. So that as at the end of the day, long-term liability and current liabilities are just the same, only that the area of equity is the one that is changing. So once we are able to master that, going forward, things will be very, very easy on our side. Things will be very, very easy on our side. We look at a question, considering a question without any aspect of admission or a retirement. Then once you're done with the question complete without admission or retirement, we'll now proceed and look at a question whereby I'm having event where things are changing. At that point, I know will be very good. So to that point, guys, thank you so much. Let us meet in our next class where we are going to consider our question. Thank you.